I think that the information that's accumulating is going to weigh more and more on their policy decisions going forward. It's really hard when you consider that PCE or core PCE, which is what the Fed is looking at, is showing signs of declining to continue raising interest rates. And again, I'll refer back to Ed Hyman. His estimate is that we'll see core PCE at 1.6%. In the next few months. With inflation that low, the Fed clearly has not fulfilled its mandate to get inflation to 2%. And I think that they're looking at the data. I'm sure that they're sensitive to it, and I think that's one of the reasons why that I'm becoming more and more confident that they're going to say, let's just take a break, guys, and let's watch the data. And maybe we need to give the market a little room to breathe here. But that should be good for risk assets. And I think we will get what I've been referring to as an Indian summer. That all of a sudden...
Are you calling the bottom for the equity market, Scott?
I think it's nearby, Brian. I would be a buyer more than a seller at this point. And even if we do get a further collapse in prices, any decline in prices in equities from here is going to result in the Fed announcing that it's going to take action. So we're close enough to a bottom that investors should be stepping in.
Scott, this is Jenny Harrington. I have a question for you. Can we get more granular? And as you think about these defaults, what specific companies or industries or micro industries do you think are most at risk? And are they at risk because they're the ones that were kind of dependent on that sub 3% debt for life support?
Right. Well, I was going to say my bankers at our firm might get upset if I name companies, so I'll stay away from that. But there are industries that I look particularly troubling. Brian mentioned energy, of course, but there are other industries that have taken on a lot of leverage in the M&A boom. And there are a number of companies in media, for instance, that have taken on a lot of leverage to do acquisitions. When you look at the telecom space, there's a lot of leverage there. Matter of fact, if you look at the number of single A and triple B bonds whose leverage ratios are equivalent to what historically has been a double B credit, there's certainly going to be a wave of downgrades here at some point. And I do subscribe to the view that with over half of the credit index now being triple B in the investment grade world, the likelihood is that we'll have, I would say, about $1 trillion worth of high yield bond or investment grade bonds downgraded into high yield territory in the next 2 years. That would be, given the fact that the high yield bond market is only about $1 trillion in size, we would have a doubling in the market, and that's certainly going to cause a lot of strain on companies that have taken on a lot of leverage.
I know we're running out of time, Scott. I got a couple more questions with you here. We'll kind of do a rapid fire if we can. It sounds like telecom and media. It sounds like you might have called out AT&T, but I know you're not going to go into individual companies, so I said that, you did not. Here we go, quickly. Does Jerome Powell not need to be fired, but does he need to step down? Is he the right guy for the job?
I think Jerome Powell has exceeded expectations. I think he's doing a great job. I think he needs a little more seasoning in the position. A lot of Fed chairmen have made communication blunders in the past, and I think we should give the man a free pass here.
What are the odds we get a rate cut next year? Not hike, cut.
50%.
There's a 50% chance we get a rate cut next year.
Yep.
I don't even know how to follow up with that one. What? I think somebody has finally rendered me speechless. Well, what happens to the credit and to the equity markets if you are indeed correct, Scott?
I think, historically, Brian, when we've had this kind of a pullback in stocks, the Federal Reserve reacts. They at least pause. About half of the time, they go on and do a rate cut. Every one of those situations, whether it was the stock market crash of '87, it was the Asian crisis, these were all opportunities to step up and buy. And so I would be looking, to selectively pick up some what I think some cheap assets that are out there, because I think inevitably the Fed's going to have to react to this.